Hello, and welcome to another episode of the Markets at a Grand series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we will be talking about the New York Open in preparation of the data that we are about to receive. So we'll look at the key event, which is the US CPI inflation. The report is expected exactly at 4:30 p.m. So once we get to understand how it may affect the markets, then we will be more prepared on taking advantage of the opportunity that might come in. So that being said, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section. These will confirm that everything is working just fine. So as usual, you should all know that this does not constitute investment advice. Neither is it a recommendation to trade. So this is purely educational. So once you join in, make sure that you are in the right framework. So always do your own due diligence, your own analysis, and practice proper risk. So I can see a lot of people join. Hello, Eric. Hello, Owen. I can see Volvo. I'm assuming that's username. FX Apprentice. Hi, and welcome to the session. So today I want us to discuss one key thing that I've observed shifting in the markets. And this is a divergence between two major central banks, being the Bank of England as well as the Federal Reserve Bank of the US. So begin real quick. I don't want to waste time, mainly because I want you guys to have sufficient time to prepare for the news. So I'll begin by sharing my screen. So what we have here on this chart is the interest rates level in the UK. So the Bank of England kept the key interest rate unchanged at a 16-year high of 5.25% for the fourth consecutive time during its first meeting of 2024, that was in January, in line with market expectations. However, two policymakers preferred to increase it by 25 basis points, while one member preferred to reduce it by 25 basis points. So when you think of US interest rates, you know that the decision is made by the Monetary Policy Committee of the UK, which has 9 members who will vote on each meeting on whether to hike, hold, or cut interest rates. So the held interest rates level from a majority of 6 to 3 out of 9. So 6 members voted on holding interest rates at the current level. We had 2 members voting to increase interest rates to 5.5%, and only 1 member preferring to cut interest rates. So that was quite concerning for a lot of investors, seeing that there are members who are advocating for rate hikes. And if they change their decision, maybe they'll go to hold rather than cutting. Then a lot of investors are betting that interest rates in the UK might remain higher for longer, and this is a bullish for the UK. So the other key thing to notice is that the UK has been hiking these interest rates in order to control inflation, which has been moving downwards as expected, but in the last reading, the inflation rate moved higher. So just by looking at this, let's say we look at a 5-year estimate, you can see that interest rates were really high at over 11%, inflation. And this inflation has been dropping back towards target. The target for the Bank of England is at 2%. But then the inflation rate is still well above the target at 4%. The next inflation report will be expected on Wednesday. That is tomorrow. So with this inflation rate now slightly moving higher, and we have seen this is just from the last reading, where inflation moved from 3.9% and climbed higher to 4%. There is an overall expectation that this inflation could continue rising and the Bank of England could hold rates higher. So from the expectation here on the economic calendar, you can see that the UK CPI is expected tomorrow at 10 a.m. And the overall forecast is that this inflation could rise to 4.1%. So that's the trajectory that a lot of economists are expecting. And as long as inflation remains high, then the central bank will potentially hold interest rates higher for a longer period of time. So in contrast, now when you move to the US side, you'll notice one thing. The federal funds interest rate has been at 5.5%. But then US interest rates are not a specific number, they are a range. So this is only the upper limit. The lower limit is 5.25%. So the interest rates in the US is between 5.25% and 5.50%. So if you do an interpolation, then the midpoint is basically 5.375%. So with that in mind, then you know that the interest rates in the US are just slightly higher than the UK, where we have seen the UK is at 5.25%, and the US is at 5.375%. So the difference is small, it's about 12.5 basis points, and I had done a post about this. So the difference is 12.5 basis points, and that difference is about to change. So we know that the US has been looking to cut interest rates, but inflation is not behaving as expected. So in the last couple of readings that we saw from the US, and this is the trajectory of US inflation, it dropped from 9.1%, which was the high in June last year, kept going down, got to 3%, and then started rising, got to 3.7%, then down to 3.2, 3.1, and then in the last reading, it rose 3.4%. So clearly, the US is closer to achieving its inflation target compared to the UK. And with this 3.4%, there's an expectation that inflation report today might drop to 2.9%, which would be the lowest level we have reached. Remember, the lowest that we saw in this cycle is 3%. So if you look at the 5-year cycle, you can see it's a general drop, rise, a drop, a rise, and we could be seeing a drop happening this afternoon. So the data is expected at exactly 4:30 p.m. And as you can see, CPI year over year was 3.4%, and we expect this to drop to 2.9%. So what this means is that investors are trying to weigh which one will have higher interest rates over the near term, let's say over the next 1 year. And there is a probability that the US could be the first one to start cutting interest rates between the two central banks. And if the US cuts interest rates, then the expectation is that the rate cut would be 25 basis points. So looking from the CME FedWatch tool, you can see that on the next meeting, which will be on the 30th of March this year, the market is pricing in an 86.5% probability that the Fed will hold rates at this level, and that would mean there's no rate cut, and we may have to wait for the next meeting, which would be scheduled for the 1st of May this year. So in that case, we could be seeing a higher probability of the Fed cutting interest rates, and you can see the market is already pricing in a 1.3% probability that the Fed will be cutting rates. So if the Fed cuts rates to between 5% and 5.5%, then it would mean that the midpoint is 5.15. So 5.125 be lower interest rates compared to the UK, and as a result, it would create what we call a carry trade between the UK and the US. This means that any investor, or basically the big banks, will be able to borrow money from the US and invest in UK bonds. And as a result, that flow would mean that there is more scarcity of the UK pound and a higher availability of US dollars. And as a result of that, we would be seeing the pound strengthening against the US dollar. So now looking at the expected outcome today, there will be quite a number of data releases. So it's not just one report. So first one, inflation rate year over year. This will be the main focus, moving from 3.4% and potentially dropping to 0.9%. So month over month, we expect that prices, this basket of commodities, increased by 0.2% month of January. And this was the same increase as the previous month of 0.2%. If this happens to be the case, then we will achieve the 2.9% expectation. So for core inflation, which is inflation measured without focusing on the energy prices, which tend to be quite volatile in the markets, then in this case, we expect a drop of inflation to 3.7%, down from the previous reading of 3.9%. So core inflation month over month is expected to also have increased by 0.3% in the month of January, similar to the reported number of 0.3% in the previous month of December. So with this in mind, then it makes more sense to focus on the pound USD currency pair. And in this case, we are already seeing investors betting on this. We already broke trend line that was holding for the last 2 weeks. And now the market has broken above, has also broken above this trend line. So from the forward chart, if I zoom out, you'll notice where this other trend line emerges from. So it's a trend line that has been tested 4 straight times. We have had a resistance around here for pound USD. And now the market broke towards the lower side. Didn't quite get to our target, which was around 1.5, but then bounced up right here for about 2 weeks. And now you can see the strong momentum upwards. So this means that there's a strong expectation that the pound will continue making this rally and potentially head to the previous high of around 1.277. So this is still a theory, and it might be confirmed once the news are announced at 4:30 p.m. So it's something that you might be considering, especially after the news. It's always a bad idea to make a trade before a major news announcement. So sometimes it's better to be patient, wait for the announcement, analyze the outcome of the news before making a decision. So that way you know exactly what you're doing and you'll be trading from an informed perspective. So other pairs that we might be seeing having some volatility as a result of this build-up would be, let's say, the pound yen. So remember what I've been telling you guys, that whenever you're trading, you want to pair a strong currency with a weak currency. So if there's a likelihood of the pound remaining strong across board, then you want to trade that against a weak currency. And the weak currency predominantly has been the JPY in the markets. And what we are seeing here is a potential break of the upper trend line. So if I was to zoom this, then we try and understand the trend line that the market is forming here, then it would make more sense to expect the market to head for a break towards the upper side, since the Bank of Japan is not considering hiking interest rates. So there's still more room for upside momentum, and this could play out as expected. So we could continue seeing the pound being strong against the yen, where the Bank of Japan has not been hiking interest rates. And as a result, their currency has been weakening against other stronger currencies that have pre-existing high interest rate environment. So in this case, for pound yen, I expect to see a continuation of this strong bullish momentum. And from the forward chart, we can already see that the previous high, this is a high that we saw within the last 4 weeks, was holding at this level, and it was only broken in the last 4 candles. So this was a strong signal for potential continuation of bullish momentum. So as for other pairs, we may consider looking at what's currently happening with US equity indices. So US equity indices have been on a very strong bullish momentum, but yesterday there was a big surprise. After we hit an all-time high, the market reversed immediately. And today it seems like a continuation of this reversal. So from the forward chart, you can see the market now attempting to go back downwards. So there's a good likelihood that there is still more room for downside before the market picks up momentum. This would be accelerated by the result of the CPI news. So remember, CPI of a basket of price, a basket of commodities, and if this basket of it basically is a high inflation, and high inflation tends to be quite positive for stocks. So as long as there is high inflation, it's positive for stocks. But if inflation is going back downwards, means that the prices are not increasing. Weakness in purchasing power, which is reading prices moving back downwards. And in this case, it's not like the US prices are moving downwards. They're only not increasing at the same pace. So increasing at a much higher pace. We saw 9.1% the previous year. But now what we are seeing here is inflation approaching target, which might lead to Fed states. And as a result, we could be seeing the US 500. So if you also look at the Dow Jones, after the strong acceleration higher and forming a higher high, also a key an important reversal pattern here. And from this bearish engulfing, it might be an indication of strong entry by sellers. So yes, after the market hit an all-time yesterday, reversal, this reversal seems to be over today. So we could be seeing the reversal accelerating or the market aggressive full-on recovery, and that's based on the outcome of the CPI news today. So for AUD/USD, you can already see the Australian dollar strengthening against the US dollar. This mainly because the dollar index has been weak on since we started the London session. Then now, as we head into the New York session, things we are seeing the weakening is because a lot of investors are expecting that the CPI might come weaker than expected. A weak CPI would mean that the Fed goes ahead with the rate cuts. So for other pairs, including the USD JPY, you can see the reversals happening. And we could see the Japanese yen starting to gain some ground. And this is based on whether the US dollar weakens or not. So I know there's a lot of you guys that majorly focus on gold. So we have what's happening here. So after this, led to some continuation of the bearish momentum. But then immediately after that, you can see that the market changed direction and moved right back in pattern. So from the forward chart, this is what we have been waiting for. So clearly, the market has been trading in this symmetrical triangle, and a breakout is imminent. At some point, we'll see a breakout happening in gold, and that would probably be fueled by the CPI that is about to happen in the next 12 minutes. So in this case, we've had a very strong momentum for the better part of the day, gold gaining hour after hour. But then the rest will be, and as a result, it creates some good opportunities. So if there's no big difference between the expectation and what actually happens in gold, then would be seeing gold making a rally and getting a price level of around $2,047 per ounce. So this is yes, $2,047 per ounce. But then the better bet would be if the dollar was to strengthen, then gold breaks the trend line, then we would head straight for 1973. But then the opposite is also true. The market would rally, break the upper trend line, and the target would be 2087. So this is the target in the bullish case for gold. But then if the dollar happens to be the stronger currency, then the case is that the market might be headed for 1973. So in that case, I'm hoping that everyone is prepared, know exactly what to look for, with my inclination being mostly on the UK pound. And this is within the case where inflation in the US drops more than expected. And as a result, investors flip on and go for the pound. So I'm checking to see if there's any questions that you guys may have raised. We can see Manti in the house, Molenga, Prince John, Zero, Eric, Jason, I can see Toshens TV, J Squad, and John. Thank you guys. One of you guys have one username that I can announce live podcast. Live on the webinar. So I don't see any question in the comment section, and I want to allow you guys to now have some time to prepare your charts, your analysis, and of course, make sure that at least, even if you're not trading, just observe what happens in the charts and compare with the outcome of the news, and that would be a good learning moment. If you're still trading on a demo account, at least try and execute a trade analyzing the news and see what happens with your demo account. Of course, if you're on a live account, you have to add on to your analysis and always practice proper risk management. So even if you see a big spike in price, you have to be very prepared to protect your capital. So I don't want to hear about anyone who just saw the news, executed positions blindly, or traded with a much bigger outsize than that they would otherwise do. So make sure that you're always protecting your capital and making an informed decision. And that means, first of all, processing and understanding the news before making a trading decision. So thank you very much, guys. And I hope to see you on the next session. And remember to watch the latest episode of the podcast. Good question. What are we doing with gold? I've already mentioned that with gold, the bullish case, in case the dollar weakens further, then we would be seeing gold continuing to make a rally and get to 2047 price level. And if there is an extension, then we move to 2087. But then, if the dollar happens to strengthen as a result of the news, let's say there's an upward spike in inflation, then gold could break the lower trend line again. And if that happens, then the target would be a drop all the way to $1973 per ounce of gold. So thank you guys. See you then.